My fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy.
For the second day in a row, stocks plummet at the opening bell. The Dow Jones, S&P 500, and Nasdaq once again dropping between 2 and 4% during early trading.
Musk calling Navarro, quote, dumber than a sack of bricks, end quote, and a, quote, moron.
Boys will be boys, and we will let their public sparring continue.
There is no postponing. They are definitely going to stay in place for days and weeks. That is sort of obvious. The president needs to reset global trade.
I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it.
So, despite repeated assertions to the contrary, Donald Trump backed down on his tariffs, instituting a 90-day pause. The markets responded well to that announcement, with the Nasdaq rising 12% yesterday, its biggest increase since 2001. But are we out of the woods yet? And what was that all about yesterday? Well, I'll be talking to Scott Lucas, Professor of US and International Politics at the Clinton Institute at UCD in a moment. But first of all, on the line, Leonie MacCann of Irish Life Investment Managers. Tell us what's happening in the markets this morning in Europe.
So it's a very, very eventful day yesterday in markets and this morning, Pat. So we're seeing markets open up very high in Asia, and it's looking like Europe as well is going to up high. So futures in Europe, and Europe already opened positive, but futures were indicating about a 7% rise in Europe this morning. And that is following the news, as your intro just outlined there, Pat, in terms of the pivot that Trump has made in response to, as he defines it, the yippiness that we've seen in markets.
Yeah, now people who don't play golf probably don't know about the yips. And that's
Yes.
the reference he was making. When people, and many famous golfers have suffered from the yips, where they take a putter in their hands, and even if it's only an 18-inch putt, they just get so tense about it that they miss a sitter. Anyway, that's what he was referring to when people get yippy. That was a golfing reference. The comedians overnight were suggesting that it was yippee from Putin as he watched Trump tank the American economy. But that's perhaps for another day. Now, tell me, why do you think he did an about turn?
So I think the yippiness that he's actually referring to wasn't the gyrations that we were seeing in markets in terms of equity markets, although that definitely played a role. I think actually what really moved him was the move we saw in bond markets. So bond markets are often considered the adult in the room. And I think in the past few days, we've definitely seen the adult in the room in terms of the US bond market. So what we've seen over 48 hours was that the yield on the US 10-year government bonds, which is essentially the cost of the US borrowing, had risen 60 basis points. That's a very substantial move in 48 hours. And what happens in the Treasury bond market, the US bond market, often doesn't stay in the bond market. So in past crashes, you would often see US government bond yields fall as they're seen as a safe haven asset, a safe asset to flock to in times of market stress. Now, we didn't see that in this COVID sell-off because the Fed had to step in to provide liquidity. So with bond yields rising that quickly, there was a risk that that could lead to a systemic failure. And essentially what the market, the adult in the room was saying, enough is enough. There's a real risk to growth and recession and inflationary risks here.
Now, the US is massively in debt, and how it funds that deficit is through flogging American bonds. And the problem for Trump is if there's no confidence in financing America, that's big trouble.
Exactly. So you'd already seen the moves in markets, and what you saw, the immediate reaction, just given you've seen Trump pull back now after, as your intro showed, very resolute saying that he wasn't going to reverse. You've seen that positive reaction because the market very much sees this as a negative impact from tariffs, because essentially tariffs have two negative effects. They elevate uncertainty, which that can have a negative impact on household and corporate spending decisions. And they have a negative impact on corporate earnings as companies are going to experience higher production costs. And all in all, that can lead to a growth shock. And that was very much what the market was starting to price in.
Now, the question of the timing of all of this, I mean, Trump himself told people that they should stay calm. In fact, he recommended they buy in advance of doing his U-turn. And it smells a bit of insider trading.
Well, yes, it's a bit suspicious, particularly on his social media company. He did post, and now is a great time to buy just before he announced this. But I do think the moves in bond yields really did start to scare a lot around him and himself. And as much as he was kind of very resolute around this is about Main Street, not Wall Street, when you look through to the figures, about 60% of Americans do own stock, whether that's self-directed through mutual funds or through their 401ks. That's a high proportion when people are looking at their retirement savings and seeing significant losses, both on their equities and their bonds. That's going to have an impact. So I say a pressure did start to build.
Now, the question of a 90-day pause, it's like that old Jerry Adams line. They haven't gone away, you know, except we're talking about tariffs. They haven't gone away. They are just paused.
This is it. So I think what you're seeing right now is a very positive reaction in markets, because what we have been waiting for to see is, are these resolute tariff levels or is there room for negotiation? So I think the positive moves are reflective that Trump, there will be room for negotiation and he's creating 90 days for that. But we're not out of the uncertainty yet. It's pushing the can down a road to an extent, and we still have to work out where will tariffs land. How long will they be in place for, and where do the negotiations or concessions go? So I think from an investment market perspective, what we've seen recently, and I think going forwards, what's paramount is trying to maintain a diversified approach and try and manage some of the risks that are out there, because we're not out of the woods yet, although it is a positive step to see, in Trump's own words, that he can be flexible. There is, I would say, though, the issue of trust. I think that's something that you need to consider. A lot of countries around the world and politicians will be thinking, well, if he changes his mind on this, what else could he change his mind on? And that has to be worked through as well.
Now, just one disturbing graph I'm looking at here, and I got it online. And the suggestion is that insiders got a 20-minute head start on the rally yesterday. Looking at the graph, NASDAQ call volumes and S&P 500 SPY calls both spiked 10 minutes before Trump made his announcement. Now, that would be worrying if I was someone doing your job, for example.
It is worrying, and there should be no insider trading, as we know, and you would hope that there is investigations into that, but it's definitely not something that we would see as positive.
What does all of this mean for the Eurozone? I mean, if America is no longer a safe haven, does it put Europe into the pole position?
So what we have been seeing so far this year is that Europe has been outperforming in terms of its equity market versus the US. And a part of that has been the pivot and developments we've seen in Europe in terms of fiscal spending and Germany removing their fiscal brake, which has been a positive development for Europe, which has probably had underinvestment and underspending for a number of years. So I definitely think there's potential positive opportunities for Europe. Tariffs, obviously, there's still a level of uncertainty around where the tariff levels land with Europe, but I do think this does create a catalyst for Europe to maybe address some of the issues that we saw in the Draghi report earlier last year.
All right. And still, the tariffs at 10% across the board are much higher than they were originally. So, there is still a tariff effect in play.
Indeed. And I think whilst there's an initial positive reaction to the 90-day reprieve, the market still needs to calibrate what does that 10% tariff mean? And indeed, in terms of the implications of the trade war that's still ongoing with China and the US and where that ends up.
Leonie MacCann of Irish Life Investment Managers. Leonie, thank you very much for joining us. Scott Lucas, listening to all of this, we want to talk the politics of what happened yesterday, Luke. So superficially, what was your initial reaction before we got down into the nitty-gritty of maybe insider trading and some sort of bad faith actions on the part of the Trump administration?
I expected that Trump would have to cover his backside at some point after only the day earlier talking about how all the countries in the world were kissing it because he was in such a strong position. I was a bit surprised how sudden it occurred, Pat. And then I went back and played connect the dots. So if you can give me a minute to explain what happened that led up to the decision. It begins with what happened in the U.S. stock market last Thursday and Friday, where you had, that sharpest plummet in stock prices since the pandemic. And that exposed a division in the Trump administration between two camps. Now, there's one camp, let's call them the warrior protectionist. They just want to rip apart the international trading system. They don't believe in the World Trade Organization. They don't believe in any multilateral approach to trade. They believe in going to countries one-on-one and effectively putting pressure on them, bullying them. That includes a guy named Peter Navarro, who's all across U.S. media. It includes another influential advisor named Stephen Miller. It includes the U.S. Trade Representative Jameson Greer. The other faction, however, is a little bit more measured in their approach. They just want to use the threat of tariffs to open up negotiations to try to get a more favorable trade position, especially in goods. That includes the Treasury Secretary Scott Bessent, Kevin Hassett, who's the head of the Council of Economic Advisors. That stock plummet last Thursday, Friday, strengthened their hand. And on Monday, Kevin Hassett, you may remember this, Pat, remember he went on U.S. media and said there will be a 90-day pause?
Mm-hmm. And that caused that mild surge, which was brief. But it was his words that suggested that might be a reality that caused a little surge in the market. And then with Trump confirming it yesterday, a huge surge.
Yeah, but what happens on Monday, Pat, is that the White House walked back what Kevin Hassett said because the warrior protectionists kicked back. They said, no. Peter Navarro went on TV immediately and said, no negotiations. And Trump not only was ruling out any effective negotiations, remember he was calling on Europe to pay reparations to the U.S. So they were still talking tough. And then your previous guest had it absolutely right. What tipped this was overnight in terms of Tuesday going into Wednesday, that the bond market plummeted in the sense that nobody wanted to hold U.S. bonds. The Japanese went on the bond market twice to try to offload some of their bonds. Nobody would pick them up. And it became clear both to key investors in the U.S. and to other countries that U.S. bonds, which are usually a safe haven in a time of turbulence, now were at risk of becoming toxic. And I think officials went to Trump on yesterday morning. They told him how severe it was. And that's what tipped it, because Scott Bessent, who was the Treasury Secretary, and Kevin Hassett, the chair of the Council of Economic Advisors, were in the meeting with him when he made the decision that, yes, he would have to make this U-turn.
Now, he seemed to have taken many people utterly by surprise, and yet, as I quoted there to Leonie, the fact that insiders in the market got a 20-minute window, a head start, if you like, in the market. And I'm wondering, who made money yesterday? I mean, did Trump make calls, we'll never know perhaps, to his favorite Republican senators and congressmen, all of whom would have share portfolios, and tell them to buy?
Let me explain that they had more than a 20-minute window, Pat. The Trump tweet, which was just a simple tweet, now is a great time to buy DJT, right, went out at 9:37 local time. Now, notice that he'd said not only, it wasn't just that he said to buy, he adds DJT. Now, he almost never signs his tweets DJT. What is DJT? It's the initials for his listing on the NASDAQ market, one of the major markets in the U.S. So those people that took that not only as a tip-off to buy, but as a tip-off to buy his stock, which is his social media companies, his media companies, they made a killing yesterday. The stock price on DJT started to go up even before Trump's announcement, and then it soared after the announcement, so it was up almost 22% yesterday. So who makes money on that? It's people who have sold short, who have said, look, I'm going to buy this stock, but I'm going to buy it at a certain time, right, when it's hit rock bottom. And it's people who immediately jumped into the market like hedge funds as soon as they got that effective social media tip-off from Trump 4 hours before he makes the actual announcement.
Do you think there'll ever be any investigation into how many members of Congress, for example, bought stock in that particular window?
Absolutely not. because the broader story to this is that this is something that should be investigated by the Securities and Exchange Commission. But as part of the purge of government agencies to try to make them loyalists to Trump, key staff at the SEC have been fired. Others have been put on orders to stop work, and others have been ordered to pause their litigation, their investigations, including, for example, a possible manipulation of the market. So there's no one there to investigate, even if you thought that a president who puts himself above the law would be at risk of such.
In terms of predictability, and that's what Leonie was referring to, and many people have referred to the lack of predictability in the Trump administration. Particularly, you've got two warring camps, and it looks like the Besant stroke Musk camp, because he labelled Navarro, as you know, what was it, as dumb as a sack full of bricks and a moron. You know, when you've got two warring camps, it makes the administration even less predictable. So what is this doing to, I suppose, the dollar long term? Is this going to be regarded still as the best place, if you like, the reserve currency of the world? Can that continue?
Well, that's a huge question. And I mean, and the broader question is, can the U.S.-led economic system put in place after World War II, which is, you know, what we have lived through all of our lives? Can that continue? And I specifically, in terms of the currency market, there are some people who are Trump advisors who are saying that the dollar should no longer be the reserve currency. So it should no longer be the currency of last resort that people can count on. Now, what do you then make the reserve currency? Do you make it gold, which it used to be in the early 20th century, but which proved unstable? Do you try to make it a digital currency, a type of cryptocurrency as your reserve currency? That's how crazed this has got, because the fact here is that even if the Trump people don't say, look, we're moving away from the reserve currency, a lot of people don't trust it now. And that's, again, what you saw in the bond markets overnight. So the broader question, however, is that although they are going to face a trade war with the United States, this is China's big opportunity. China's big opportunity has been, of course, for years to say, look, we have an alternative economic model. Trade with us, accept our investment, accept our financial assistance, which is what they say to countries around the world. Now, some of those countries who might have been loath to get in too close with the Chinese might say, look, that might be a safer bet than the Americans. And we're not just talking about small countries in Africa, countries in the Middle East, countries in Southeast Asia. There have been signals from India in the past 48 hours, a longtime bedrock of the Western system, that they may want to start talking more closely with China about economic cooperation. I'm not saying China's going to replace the U.S. as the economic leader of the world, but I'm saying that the spaces that are opening up in terms of how countries maneuver economically, you can no longer assume the rules of the game that we've had for 75 years.
Now, some of the texts that are coming in, I don't think Trump ever intended going through with the 20%. He was exerting his power. He knew everyone would clamour at his feet begging for a deal. He aimed high, knowing he'd get somewhere in the middle. That way the world feels like it got a good deal, and the Americans will say he made more money from them than the previous government, and they'll sing his praises, making him more of an egomaniac than ever he was. Another one, David McWilliams called it weeks ago when he spoke about the massive loans from China and Europe to the US. When you're owed money, you're in a good position to call the shots. But America owes billions and trillions to these guys and cannot call the shots if those loans were called in. That's from Dave in Leaslip. It's great that everyone has finally figured out how backward and stupid the USA is and that China is the real superpower. I could never understand people who bought into that leader of the free world nonsense. Time now to lose the inferiority complex and cease fawning at the USA as some sort of mecca. Time to look east and form new partnerships with intelligent people. That's from Seamus. Could the Democrats investigate if Trump made money out of this, and can he be impeached? How can investors ever trust the US stock markets again? So all sorts of questions raised by Trump's actions yesterday. Where is this going to end?
Well, let's take a couple of those and then say where we might wind up. First of all, the Democrats are calling for an investigation of what happened yesterday, which could be possible market manipulation. In terms of the broader question of oh, should we welcome a Chinese-led global economic system? No, I think that's actually a knee-jerk reaction because China has got its own issues. It's got its own manipulations of global markets, as well as other issues. Let's talk about human rights issues in China and its assertive actions across Asia. So I don't believe in jumping from one fire into another. I think you need to restore the international system, such as the World Trade Organization, such as international financial organizations, which will establish the level playing field and not have it disrupted by either Beijing or Washington. But then more broadly, Pat, we need to dispel the myth that this is the art of the deal. I mean, after Trump made the announcement yesterday, all the minions came out and talked about, oh, what a genius move. Oh, this was amazing. This was wonderful. No, let's call this what it is. This was a bully who tried to make a quick bunch of money off of countries, as well as those within his administration who wanted to rip up the rules of the game. And he got pushed back. He got pushed back by the Canadians, by the Mexicans, by the Chinese, and yes, by the EU. Now, there are still tariffs out there. There's still not only the 10% baseline tariffs, but remember there's the 25% on steel, aluminum, and cars. And what I suspect is going to happen is that China will not back down, but that the EU and Canada and others will now be very pragmatic. They will not retaliate in a major way against the Americans. They'll let the cost of this seep in and hit the consumer, the manufacturer, and the farmer in the U.S., because they're the ones that pay the cost of this. And as Trump's popularity slips because of that and his political position erodes, then they'll hope we can get back to some type of semi-normal.
Scott Lucas, Professor of U.S. and International Politics at the Clinton Institute at UCD. Thank you very much.